Today we will understand the double entry accounting system and answer the big question in everyone's mind: when to debit, when to credit. So in a double accounting system, all financial transactions are recorded using a double entry booking system, which means for every transaction there is a debit and a credit. So let's take the example of a cash withdrawal in a bank. You debit a customer account so and so, and you credit a cash GL with the GL code as AS0001 with the same amount. First is the debit credit, which is the indicator. Second, we have the accounting role. One case it is customer account, the other leg is the cash GL. The third one is the accounting head. So because software cannot recognize free text, we always substitute it with a account number or a general ledger code, which is called the accounting head. Of course, there is the amount and currency. So apart from this, obviously you would have a whole lot of other parameters, namely the transaction date, the value date, the period code, and so on. For us, it suffices that these are the key elements to an accounting system. So the question arises, when do I debit, when do I credit? When asked, most people would say, this is a cash withdrawal. So definitely a customer account is debited. And then if one leg is debit, obviously the other or the contra leg would be a credit. Now that's not the way to go about it. While this may answer the simple scenario, we need to apply certain rules so that we can resolve debit and credit in a more complex scenario. So let's try to understand this. But before that, we should know what are the classifications of these account rules. We have income, we have liability, we have expense, we have asset. Incomes obviously are the inflows due to sale of goods. Liability, again an inflow, which is something which you owe back. Expense are outflows, namely salary, electricity bills. Assets are something which I owe or which is an use of funds, like maybe to use to buy a building or a machine. So these are the type of accounting roles. So I have clubbed income and liability in lot 1, expense and asset in lot 2. So let's see why we have done that. So all receipts can be classified either as an income or a liability. So if the receipt means that you are the sole recipient of the fund and you won't owe that money back to anybody, it can be classified as an income. Whereas the receipt which you get and which you owe back to somebody sometime is a liability. So that way any inflow can be classified based on whether you owe it or you don't owe anybody. You can classify it as an income. So for example, an income for a bank could be the fees the bank takes for a demand draft, the charge bank takes for issuing a debit card, monthly charges bank takes for not maintaining the minimum balance, or the interest bank charges for a loan or account having negative balance. So the first two are transaction based charges, the last two are periodic charges. Similarly, the liability could be the money the customers bring in for fixed deposits or the savings account balance of customers. Now these are inflows from customers, but you actually owe it back to the customer when they demand it. So that explains the classification of income and liability. Similarly, all expenditure which a bank does can be classified as an expense or an asset. Now, when do I know that an expenditure is an expense or an asset? So we apply what is known as the consumption test. If what you have bought is consumed within the balance sheet period, we can call it as an expense. If you buy something which the purpose of which outlives the balance sheet, is known as an asset. So let's take some examples. The first example would be an interest bank has to pay back depositors or to buy stationeries because they are consumed within the balance sheet period, to pay staff salaries monthly. Now an asset is something whose purpose is more long drawn. For example, to buy a server or a machine. Now that is a money spent to buy something which will be useful for not just 1 year but maybe 5 or 10 years. the principal amount of a loan which is extended to customers, because the customers can pay back after 10 years or 20 years. So this way you're able to classify between expense and assets. Next, it is important to know the nature of balances. Assets, as a rule, are in debit balance. Liabilities, as a rule, are always in credit balance. So this means that more the liability increase, it means you need to credit that entry. The more the asset increase, that leg you need to debit. Similarly, for income expense, incomes are in credit balance, expenses are in debit balance. If expense increase, you need to debit. If income increase, you need to credit. Just to recap the golden rules, asset increases, it's a debit, asset decreases, credit. Liability increases, credit, liability decreases, debit. Income increase, credit, income decrease, debit. Expense increase, debit, expense decreases, credit. So these are the simple rules which you need to keep in mind. Thanks for watching this tutorial. Just do like, subscribe and share this video, and so that you can get more such tutorials on your feed. Thank you.